Well, as mentioned, Julia Lee from Bell Director Michael McCarthy, CMC Market Stockbroking with us now. Julia, let's start with you and the Billabong equity raising. Really another slap in the face for shareholders with pretty heavy dilution for those who choose not to take up the offer.
Maura, this is a huge blow for Billabong shareholders. We haven't seen a capital raising that's been this bad since the tailwinds of the global financial crisis. A massive discount to the last traded price, a 44% discount, and hugely dilutive, 6 new shares for every 7 that Billabong shareholders own. So a massively diluted capital raising, and then of course we saw that profit downgrade coming through with EBITDA now forecast to be between $120 to $125 million. Not only that, we won't see a dividend in the second half or the first half of 2013, that financial year. So for shareholders who had been looking at that historical yield of 8.7% in terms of a dividend yield, of course, you need the earnings to support that, and we're not seeing that in terms of Billabong. If we have a look at the size of this capital raising, it is very significant, $225 million. Which is more than the earnings from the current financial year as well as the next financial year. So gives you an idea of the scale of this capital raising. Of course, we know it has been a difficult time for Billabong, and if we have a look at where its revenue comes from, 30% of its revenue comes from Australia, and if we have a look, or Australasia, and if we have a look at some of the commentary that has come through from our retailers recently, a lot of our retailers saying that this is actually worse than the global financial crisis. In fact, the worst retail environment in memory. If we have a look at Europe, where 20% of its revenues comes from, we know that Europe is in trouble. But I guess the part where shareholders was hoping would hold up were the Americas, which makes up about 50% of revenue. Americas has been quite resilient in terms of retail, but it looks like Billabong has been losing market share there as well. So a massive blow to shareholders, hugely dilutive, and a huge discount to the last traded price. We've also seen a profit downgrade and no dividends in the next 2 payments.
On the right foot today, but that sentiment really short-lived. Run us through today's trading.
Well, I've got the intraday graph just behind me, and you can see that we started off okay and it was downhill the rest of the way, and in the end down by 1.1%. Of course, China did have an impact. We saw those Flash PMI numbers coming out, and China's share market down by 1.3%, so that also impacted on the Aussie market. But if we have a look at our market, very high volumes going through, $6.5 billion worth of stock being traded. But before we get too excited, it was the June expiration for the index options and the futures, so this is quite a significant expiry in the options and the futures market. If we have a look at our market, reacting to Operation Twist and disappointment that we didn't see quantitative easing coming out of the US, and of course we did see jobs as well as growth output being revised downwards in the US overnight. And oil is worth a mention. The energy sector absolutely smashed today, and that's after oil inventories in the US hit a 22-year high. So lots of oil floating around, not a lot of demand. Unfortunately, that's been bad news for our energy space. Instead, we saw the money going into some of the defensive areas like consumer staples as well as telecom. So unfortunately, not a good session, and those China PMI numbers having an impact on the market.